ในช่วงของ World Update วันนี้นะคะดิฉันได้มีโอกาสไปพูดคุยนะคะกับผู้จัดการกองทุนบำเหน็จบำนาญข้าราชการ CPEG นะคะที่เดินทางมาประเทศไทยและให้เกียรติสัมภาษณ์พิเศษกับทาง Money Channel ค่ะกองทุน CPEG นะคะถือว่าเป็นกองทุนบำเหน็จบำนาญข้าราชการที่มีความเก่าแก่แล้วก็มีขนาดใหญ่ที่สุดกองหนึ่งของประเทศสวิตเซอร์แลนด์ค่ะมีมูลค่านะคะสินทรัพย์ที่อยู่ภายใต้กองถึง 12,000 ล้านเหรียญสหรัฐซึ่งในวันนี้นะคะเราไปติดตามกันดีกว่าค่ะว่าสถานการณ์กองทุนบำเหน็จบำนาญในต่างประเทศเป็นอย่างไรกันบ้างท่ามกลางปัจจัยท้าทายมากมายไม่ว่าจะเป็นทางด้านของตลาดเงินตลาดทุนหรือจะเป็นเรื่องราวของคนที่มีอายุยืนขึ้นไปติดตามรับชมพร้อมกันได้เลยค่ะ
Well, the big challenge that we're facing in our societies is the longevity, and I think the longevity is the highest risk. See that as a higher risk than financial markets. So to answer your question, I think people should start to think about it as soon as possible in order to have enough savings for their retirement. The biggest uncertainty is longevity, and I think that we are experiencing extremely interesting changes into the genomic research. And I think that, for example, we'll soon find a remedy for cancer. And this will, I've been told that in the next 5 years, we'll have a solution. Okay. And this will increase, accordingly, life expectancy. And this will impact, it's a good news from a social point of view, but it's a challenge for pension funds. Okay. So I think this is a greater risk than financial markets at the moment. On the short-term point of view, I see a lot of political risks, especially in Europe. I think I don't think they will lead to big changes, but I'm sure it will drive a lot of volatility on the short-term point of view. And of course, in the 2 to 3 years time horizon, I think this low yield, low return environment will persist. And it is a challenge because we are forced to take greater risks to deliver the expected return. In terms of opportunities, I see challenges with the bond portfolio in this environment with the low yield. But we see an interesting environment for Asian bonds. And this is something that we are thinking about increasing in our portfolio with positive fundamentals. And coming back to private markets, we are a bit worried because of the crowdedness. We think private markets starts to be, people like to benefit from the liquidity benefit, but too many people are chasing the same assets at the same time. So this is the reason why we find it difficult to build our private equity portfolio. I would encourage investors to focus on high quality assets, assets that investors would be happy to hold in case there is a financial crisis. Now we are experiencing an incredible environment of low predictability and high uncertainty. So my advice would be to be cautious and to reduce risk on the short-term basis. But of course, on the long-term basis, I encourage investors to focus on assets that produce a yield, namely real estate, where we collect the rents, fixed income, where we collect the coupons, and equities, where we collect the dividends. So factor-based investing is a recent approach where you can define the appropriate diversification of the portfolio. Namely, you define how sensitive the portfolio is to market factors. So it's important to assess the asset allocation, but also to assess the risk allocation, which is a different perspective. So in fact, you seem to have a 30% allocation into fixed income, but in fact, in reality, your risk is greater than that. So this approach helps to see the sensitivities between the macro factors together and with the portfolio, obviously. So by seeing the sensitivities and doing some stress test, you can decide if it's a risk you want to increase or is it an allocation that you want to increase because the sensitivity is low. So these tools are very helpful to visualize those sensitivities and take the appropriate decision. It is really key to focus on high quality assets and to define if the environment is positive or negative for different asset classes. We like the bond strategy because we think we are experiencing now a super debt cycle that is going to last, which will keep interest rate low for a while. And I think this is positive for fixed income strategies. And we like to collect the coupon. And if there is no default, we'll have our money back at maturity, and in the meantime we collect the coupons. We think it's predictable and it's sustainable. So we like this strategy at this moment.